About to apply for a mortgage or already in process on an application? Here are a few things you definitely don't want to do before checking with your lender. Quitting or changing employment. A change in employment can be a huge issue. First, it shows a lack of stability in your income that needs to be explained. Second, we may not be able to use all of your income to qualify. Things like bonus income or overtime typically require at least a year on the new job and sometimes two before they can be counted to qualify. Also, if you're currently a W-2 employee and you change employers to become a 1099 contractor, you would need to wait until you file 2 years of taxes showing the 1099 income. So you definitely don't want to make that change if you're in the middle of the loan process. Don't open up any new debt without asking us first. A new loan payment or a credit card payment could make you ineligible for your loan, even though you qualified without that debt payment. It's possible it won't have any impact at all, but you definitely want to check before you open up that account. Even if you do still qualify with the new debt, it will add to the documentation required for underwriting. We'll need statements on that new debt account, and we'll need to get the credit report updated too. So regardless, it becomes a hassle and more paperwork and time involved. If you can even avoid it, try not to have your credit pulled again after we've pulled your credit report. Any new inquiries will get reviewed prior to closing, and we'll have to explain what the purpose of those were and if any new debt was obtained as a result. Don't take any leave of absence or extended time away from work. While you're going through the loan process and we are basing your income on your current employment, if you take a long-term gap in work, it's possible we can no longer use that income to qualify. Check with us first before you do that. Late payments. You definitely want to make sure that all of your credit accounts are paid on time during the loan process until closing. Obviously, want to pay them on time all the time. But a late payment that pops up right before closing presents problems as well, because now we have to explain to the underwriter why that happened and why it won't continue to happen. And potentially it can be a deal killer as well, especially if it's an account like a mortgage. Large deposits. You don't want to move money around into your bank account while you're going through the process. Get everything in one place before you apply. Any large deposits that show up in the last 2 months of bank statements will need to be documented. So if it's cash, cash can't be documented and we can't use those funds even though they're sitting in your bank account. If it was just a transfer from a savings account to a checking account, that's fine. We just need to get the statements from both accounts to show the transfers. But cash is the big one that pops up, and unfortunately, there's no way around it. You can't document it correctly, and we can't use it. So just keep it out of the bank. Major life changes, things that happen in life, like divorce or marriage, and those are, can be good or bad depending on the situation. But a divorce potentially can be a big deal because you might have alimony or child support payments that we weren't factoring in prior on your pre-approval, and now all of a sudden we have to account for it today. That can also derail your loan approval at the last minute. So any major life changes, you got to let your lender know about those in advance. Finally, the last thing to avoid would be any type of large purchases. Buying furniture for a new house is always an exciting thing, and everyone wants to do it so that their house is perfect the day they move in. Well, guess what? Hold off on that until after closing. Unless you're paying cash for it or you have significant money in the bank account that won't affect the loan, that's fine, but you don't want to take out credit to buy these accounts. Don't go buy a car. It's amazing how many people buy a house and then buy a car at the same exact time. And that new debt can definitely be an impact on a big ticket item like a large furniture purchase or a car. So you want to avoid that altogether. After you close, buy whatever you want. I promise we don't care what you buy after, but just wait until you close. If you have any questions on these what not to do's, and when you're going through the loan process, if you're not sure on something, just ask. reach out anytime. I'm here to help.